Sage reporting for Kalkine Media. Thanks for joining us, and please stay watching for Kalkine Media's mid-market show. Price-sensitive updates. For the ASX 200 index, it has been a wild ride on Wednesday. The index is down nearly 30 points at noon after crashing at the open. Overnight in the US, the investors dumped high-flying growth stock as NASDAQ fell. US markets ended mostly flat on Tuesday. Federal Reserve Chairman Jerome Powell confirmed that interest rates would remain low to support the economy. Technology stocks tanked heavily before Chairman's remark. Aussie tech stocks are also in the fall today. ASX 200 sectors in the red territory include telecommunication, services, information, technology, materials, AREIT and healthcare. Sectors adding gains to ASX 200 were consumer staples, utilities and industrials. In market news today, technology player APPEN Limited share price tumbled as much as 11.65%, reaching Australian $17.89 today at noon, after the machine learning company's earnings outlook for financial year 2021 is below Jefferies' expectations. According to Reuters, today APPEN noted full financial year 2020 revenue growth of 12%, reaching $599.9 million, and its successful entry into China. For financial year 20, the company said it won a substantial market share in China, which resulted in solid growth for the company. APPEN announced a final dividend of 5.5 Australian cents per share. Shares of DRONESHIELD Limited rise as much as 9.1% to 18 cents, set for their best day since November 13th, 2020. Anti-drone tech maker said it entered into a cooperative research and development agreement with the US Department of Homeland Security Science and Technology Directive. For the said research, DRONESHIELD will use multi-sensor unmanned aerial system detection and mitigation capabilities. By the lunchtime, shares of Woolworths Group Limited were trading 1.05% higher at $39.50 Australian. The supermarket chain posted a 28% growth in half-yearly profit and a 10.6% increase in revenue. The company also declared an interim dividend of 53 Australian cents per share. The supermarket giant benefited from continued at-home consumption as Aussies are still home, not travelling abroad. Last year, its sales were hugely impacted by bushfires on the east coast of Australia. Buy now, pay later firm HUMM Group Limited shares today dropped about 17.05% at Australian $1.10 after the company announced it expects second half cash profit to be lower than the first half of 2021. HUMM Group will expand in Canada and the UK markets for the second half. The expansion is expected to impact the profits. For the first half of financial year 2021, its transaction volumes are down 7.4%, clocking Australian $1.25. Its total active customers at the December end were 2.62 million. The company noted Australia and New Zealand spent less on credit cards and moved to HUMM's buy now, pay later products. Despite its history of paying dividends, the company declared not to pay an interim dividend. Pioneer in IVF technology in Australia, Monash IVF Group reported a half-yearly NPAT of $14.6 million Australian dollars, which is an increase of 78.5%, driven by growth in its ultrasound business. The company also expects NPAT for the year ending June 30th, 2021 to be about 23.7 million Australian dollars to 25.7 million Australian dollars. Assisted reproductive services provider recommences its dividends and declares a payout of 2.1 Australian cents per share for the first half of 2021. By mid-market trading session, its share price was up 4.16% at 0.80. Shares of IDP Education Limited were up 8.60% at 27.1 Australian dollars by the lunchtime. International Education Services advisor informed that International English Language Testing System IELTS testing volumes were broadly in line with pre-COVID levels by December end. For half-year financial year 2021, its net profit after tax lowered 49% to 29.7 million Australian dollars, and total revenue also fell 29% to 269.1 million Australian dollars. The board declared an 8.0 Australian cents per share unfranked interim dividend. Shares of software solutions provider WiseTech Global were 1.39% down by mid-market session, traded at 29.14 Australian dollars. As it announced half-year underlying net profit after tax jumped 61% to 43.6 million Australian dollars. Its total revenue is also up 16% at 238.7. The board declared an interim dividend of 2.70 Australian cents per share. For financial year 2021, WiseTech lifted its EBITDA growth forecast to a range of 30% to 50% from 22% to 42%, and increased revenue growth forecast between 9% and 19%. A global document productivity software company, Nitro Software Limited, posted a financial and operating performance of full year 2020 exceeding prospectus forecasts. The tech firm reported a 13% rise in its full year revenue to 40.2 million. Nitro said that according to its analytics, the company is clear that the remote and digital work has accelerated and is here to stay. Its revenue is expected to reach between 45 million and 49 million Australian dollars for the financial year 2021, with an operating EBITDA loss between 11 million and 13 million Australian dollars. By lunchtime, its share price lowered to 0.60% at Australian $2.62. Australian financial services company IOOF Holdings Limited reported a 17% jump in half-yearly underlying NPAT to 65.9 million and declared a special dividend of 3.5 Australian cents per share, along with an interim dividend of 8 cents. The fund manager expects a robust business outlook for the wealth management sector. IOOF Holdings also informed that it is well positioned to deliver on its synergy targets for financial year 2021. Thanks for watching Sage Reporting for Kalkine Media.